Good morning, everyone. Welcome to another webinar and masterclass with me, Nikki Connors. I've chosen a Saturday morning. I think it's a lot more informal. I took off my jacket, so ready to go. One of the things that is very crucial when you are looking at investment property is looking at the right property that you choose. Because let's face it, I always talk about the ways that you can fail with property. And one of them, obviously, is the wrong financial structure, the wrong legal structure, and number three, which is the wrong property. Now, this morning, I've got three great guests, which I'm going to introduce you to. And they each are going to be talking about a particular profile of property, because the question is that I get all the time, is a house and land better than a townhouse or an apartment? Well, it has everything to do with what you're going to achieve and what you want to achieve. So first of all, let me welcome my guests this morning. They've either got up early or they're not going to be doing their sports for the morning, so thank you very much for that. First of all, I'd like to introduce you to Brent Metrick. Brent is head of Green Homes down in Christchurch, and Brent's going to be talking to us and with us about freestanding houses and this fantastic concept, which is the dual income houses. Hi, Brent. How are you this morning?
Morning, Nikki. Very well.
Good. I'm looking forward to this, and I think it's going to be quite a revelation to a lot of investors. Next, I'd like to introduce you to Guy Randall. He's CEO of Wolfbrook Homes and Properties. Wolfbrook and Propeller have been working together for quite a while as well, and I've got to say we've had quite a number of our clients that have purchased or in the process of purchasing townhouses throughout the country. Good morning, Guy.
Good morning, Nikki. Good morning, gents, and good morning to everyone at home.
I'm looking forward to this as well. And finally, I'd like to introduce you to Darren Brown. Darren is a renowned developer that is based in Auckland, and for the last 12 years, Propeller has been promoting and recommending Darren's properties. And I think over the last 12 years, Darren, we've probably recommended around about 250 plus of your properties to our clients. Is that correct?
Yeah, that's right, Nikki. And good morning, and good morning to everyone else. And yeah, pleased to be on here this morning. It seems like an interesting topic to have a chat about.
Yep, thank you very much. Okay, so before we get into that, let's just go back and talk about what constitutes good investment property. Well, it starts with, for us anyway, it is all brand new or off the plan. Brick and tile, concrete block, tilt slab. Why? Because brand new property, you're not going to have maintenance and repair issues throughout the life of the build. It's only 20% deposit when you are looking at purchasing the property. And of course, that's guaranteed against equity in your home or another property that you may have. Also, brand new property, it attracts a better tenant, and you're going to get a better return with that property. So that's the start. We also look at property in the main centres where you're going to get the best return and also the best capital growth. So that is really important. But the question, as I said, that we get quite often is, well, what sort of property? I want a house. Is this the right sort of property for me? What is the capital growth on the house? Is it better than on an apartment or a townhouse? It comes back to a very simple formula, which is, first of all, what you can afford. So we've got to start with that. But we've also got to look at what you need to achieve, short, medium, and long term. Now, if your aim is about paying off your mortgage, that then gives us an idea of the profile of the sort of property and the price point of the sort of property that's going to work for you. Now, let me give you an example of that. Say you've got a mortgage of $500,000. And let's face it, over the next 20 to 30 years, the bank is going to be making at least 200,000 on that as interest. So we've got to get that paid off as soon as possible. And in one of my last webinars, we were talking about those New Zealanders 65 plus that were retiring with a mortgage, over 70%. So one of the first things that I like to achieve for my clients is using an investment property to get their mortgage paid off. So if that's all you want to do, then we look at how property doubles in New Zealand. So let's work on the 10 years. In my cash flows, I work on 12 years. But let's just say a property doubles at every 10 years. You've got a mortgage of 500,000. So in 10 years, if you want to have that property paid off in 10 years, you need 500,000 in capital gain or profit. Now, the great thing is with property, of course, is that if under the new rules, if you own that property for 2 years or more, you do not have to pay tax on that profit. So the most basic understanding and the most basic need is to have your mortgage paid off in 10 years, which means that you only need to be looking at a property that's in the 500s, early 500s. We don't need $1 million property to achieve that. So if we're talking about that price point, what can you get? And of course, we're going to be looking at areas where you do have the greatest growth and you do have the best rentals. Now, if your aim is not so much about paying off your mortgage and you're older, okay, so someone that is 60 plus, for instance, is going to have more trouble to get finance from the bank. You may have a lot of equity in your home and you're talking about getting a return, and you're talking about even selling that property and getting a lump sum sooner rather than later. Now, that then also gives us an idea of the profile of the property that is required for your needs. So it's very important that when you're looking at property investment, we've set and we understand our short, medium, and long-term goals, because you're different from the next person that comes through our doors. When we're looking at this property, there is a million properties or hundreds of thousands of properties out there, okay? We get clients that say, well, I've seen this property online on Trade Me and it's a different price to what you're showing me. Here's the other thing. All of the properties that we recommend to our clients, we complete a full due diligence. Now, what does that include? Right. First of all, who is the developer? What have they built before? What are their fixtures and fittings like? Where are they getting their finance? Are they going to finish this build for you? Now, that is particularly important when you consider the hundreds of developers that have gone down in New Zealand in recent times. The next is, what is the fixtures and fittings? Is it the look and the internals of the property? We're not looking at the highest spec. We're not looking at the lowest spec. We call it the propeller spec, which is good, solid finishes, the flooring, the bench tops, that is going to last the life of the investment. And then when you go to sell it in the future, that property looks good for the next purchaser. Now, that purchaser could be an owner-occupier, or that purchaser could be another investor. The area that the property's in, what is happening there now? What is going to be happening in the future? What is the profile of the people in the street? Is it a good mix of owner-occupier and tenants? Is there going to be shops, transport links? What is going to be happening over the next 3, 5, 10 years that's going to drive the growth and the value of that property, and what's going to drive, obviously, the rental return on that property? So right down to even the sale and purchase agreement. What is in that is going to protect our clients? So before you even see a property from us, we have completed all of this due diligence on the property. So when you sit down with us and we have identified what we're wanting to achieve, you will be dealing with me. I'm a financial advisor. Propeller is a financial advice provider, a FAP. We will have a clear understanding of the price point, the profile, and what you need to achieve. Really important. So on that note, let's now look at some of the profiles of the properties and bring in some of my guest speakers. So first of all, let's talk to Brent Metrick of Green Homes, because buying a house and land off the plan is a fantastic opportunity, but you're looking at a particular price point, and you've got to be aware of how that contract is put together and what you have to pay up front and what it could cost you if you don't have the right agreement for that property. So, Brent, good morning again.
Good morning.
Okay, so let's just start with a house and land, the agreements for a house and land. Now, there are two ways in which you can purchase this, one of these. One is obviously you've got two contracts. One is for the land, one is for the house, and you pay a deposit, and then you've got progress payments. So that's the first. So if you just want to quickly talk through that and then go into the second, which is the turnkey option.
Look, thanks, Nikki. Yes, the most popular amongst the builders, obviously, is the two contracts where you've got a land purchase, and then that follows with perhaps a master build agreement in behind that, where you're paying the progress payments monthly as the home builds. Generally, to do that, you will settle the land first, and then you'll start the repayments on your drawdowns as they come through. Now, that is a two contract process, and that's the most common amongst the building industry. The industry has been moving more towards packaging, and packaging has a lot of question marks around it because when you package, there's a variable of what's included. Now, with the progress payments, you'll pay a 5% generally deposit upfront, but you will settle your land reasonably quickly, and then you'll be paying your payments as the home builds through. And so that gives you a sense of your outlay to start, but it's not necessarily the real cost.
No, and this is one of the things that we have found that has been quite a shock for purchasers and investors in the past, and why we're not as much fans of that. So sorry, it is the real cost.
So look, we can quickly talk about the turnkey, and turnkey is an investor's dream. And why it's an investor's dream is there is one sale and purchase agreement. It's clean. It doesn't have provision for provisional sums for us to move those pricings. It's a 10% deposit, which sits in a trust account, and the balance is paid to the builder only upon completion and issue of the CCC. So the risk falls from the purchaser, which is under the progress payments, to the builder under the turnkey side of things.
Right. Now, just going back to that extra cost as well. So when we're working on, in some instances, we don't have very much of a choice with the sort of property that we want for a client, and it's going to have to be progress payments. Once again, there's nothing wrong with that if the due diligence has been completed and the full cost of that build, which is everything including landscaping, curtains, blinds, dishwasher, but we always have to add another 30 or 40,000 into that build, because what people don't realize is that you've got the interest on the money that you've borrowed, say for the land and for the progress payments, without a return. Now, a build could take up to a year, could take 18 months. So when you think about it, if you're looking at in a major, let's just say down in Christchurch, what's the average price of a 3 or 4 bedroom house down there, Brent, is what, about
approximately 800,000 or in that vicinity. But you know, you're correct, because if you're doing a construction loan during the build, you are paying around 8%, and in some cases more, depending on your commerciality and how the banks see you. Now, that over the purchase price of the land first, and then the payments through a build, will add the pretty much $30,000 to a home. And it's not just the cost of the interest, it's also the cost that your solicitor's not dealing with two contracts, he's dealing with one. The other part to this is that you're not getting a valuation every time you do a drawdown. In which in some cases is monthly or more than monthly. And it's those side costs that do add, and we take into account, or you need to take into account, when you're comparing with a turnkey versus a progress payments.
So just going on to the turnkey that we call it, and this is our favorite for clients, as you said quite rightly, it's one contract. It's a 10% holding deposit. Of course, the mortgage broker gets an approval for the whole amount, but the bank advances just that 10% holding deposit. Now, I do get clients want to do their own due diligence, which is fair enough. So they go to an area, once again, they go on Trade Me and they have a look at what else is out there. And I get questions like, well, I've seen something that is $40,000, $50,000, $60,000 less. Why is that? And this is where it is a trap for young players, because of course, building companies will offer you something and will advertise something at the lowest common denominator, which excludes a lot of that build. And I thought, Brent, if you want to go through that, because when you sit down with them and then they say, well, we've now got to add this, we've got to add this, and you look at the quality of the fixture and fittings, you're going to see that the price that they've originally offered the property to you is not going to be the price that you eventually pay. So, Brent, can you just go through some of those costs that aren't included, but make a huge significant difference to the final amount that you pay?
I'll talk about that traditional volume build, and I understand these because I've done them, and I've got to say I am guilty of advertising them in the same way, and so it's almost a gamekeeper turned or poacher turned gamekeeper. But look, first up, the ones that are sitting on Trade Me, they're not turnkey. We always call them a package, and they are a package, but you're not going to be able to buy the house without the land and vice versa. But they're not turnkey. And in that, you are going to settle the land, you are going to pay progress payments, which is beneficial from the builder perspective. And that's why the builders advertise it. But the other part, we generally will include hardscape. Now, hardscape just means a drive, and it sometimes means a drive and paths. It may have a letterbox and clothesline, which will worth a little bit, but it won't have softscape. And I mean softscape in the respect of it hasn't got the soil set up, it hasn't got the planting in, it doesn't have the lawns laid, it doesn't have the internal fences that will close off the backyard. So you add those up and there's a reasonable picture, but we are at that point pricing to catch people on a price point. And most people do buy them at that stage if they're going to be on site, if they've got the time and equity to spend on site doing that work. But it doesn't have TV aerials. It's not tenant ready. It doesn't have window coverings. And so you put those items all together. This isn't small change. It's reasonably large change. And more importantly, we sell them perhaps with a fixed price, and in some cases not, but more so, PC sums are present. And by PC sums or provisional sums, we might have an $8,000 allowance on that kitchen that is going to cost 10. No one tries to do that, but nevertheless, I've got to say that what I might choose for you for a kitchen and you might want could be two completely different things. Extras are something that are paid for on order generally, and when you add that up, that certainly adds to the builder's cash flow, and it makes that process easier, but it is not the full picture that you're actually trying to get a return on.
No. And I think one of the things that we do say to our clients that any investment has got to be hands off. It's got to run in parallel to your life. So when you've got your turnkey option, was what we offer to our clients, all the way through, you get updates on the build, and on settlement, we've handed it over to property managers, and that's it. There is no hidden cost for you. It is a fixed cost as far as the build's concerned, and it is ready for the tenant to move in. So that is really important, and it does make a big difference. And of course, banks like that as well because it's easy for them. And you know at the end of that build exactly what you're getting and what it has cost you. So let's now look at this really exciting concept of this dual income. Now, Brent, I talk about this. It was almost like nirvana, that for my clients, oh my goodness, 8-9 years ago, when I was recommending clients to these dual income properties in Hamilton, could not get them anywhere else in the country. And just to explain what that is, it's two dwellings on the one piece of land. So it could be a 3-bedroom house with a garage and its own entrance, and attached it could be a 2-bedroom or 3-bedroom, 2-bedroom unit with its own entrance and also a garage. So the purchase price is not a huge amount more than a freestanding home, but the rent is quite different. And so to get these again and on a 10% turnkey option is fantastic news. So sorry, Brent, I'm raving about these, but in the last month, I think I've had about 7, 8, 9 clients that have purchased these and are very happy. So if you could just go into that in a little bit more detail.
So we've got a range of 2-bedroom, 3-bedroom, or 4-bedroom homes. Now, we've got the range more from the point of view that as the typology of the section comes in, we want to get a north facing, we want those homes to be warm, we want them to be right for the tenants. So we'll generally choose a choice of floor plan, and that might be a 4-bedroom coupled with a 2, and might be 2 3-bedrooms, or it might even be 2 2s if that site is not going to fit something else on it. I've got to say our preference at the moment tends to be towards the 2 3-bedrooms, which is to describe it to people who aren't across it, it's like the old ownership flats that were way back, but this putting the 2 homes on the one site allows us to actually spread the site right across the 2 units. So you're halving the land value. You're also bringing your rates back a little bit, but we've included reserve fund contributions and things like that so that it's all up and running and complete. It's a very rare thing, Nikki, and you're right in what you say. Hamilton had it for a while and then closed it off.
Couldn't get the land.
Yeah, that's exactly it. Once it's gone, it's gone. And we've got a scenario happening where Selwyn have actually, in their new district, plan have said, yes, this is fine. And so I've got to say that, look, corner sites are best because you have that passive surveillance where you can drive past and see what's going on. But we're doing it on normal sites and so on, where they're set up, because some of those subdivisions, for example, it's not the council issue, it's the subdivider that will say, I want this to look like a single home from the front, and you drive down the back to the second one. And so we work with the developers and the various suppliers of the land so that we can actually get a development that looks right. And we're looking at these on an ongoing basis, so there's a constant flow. And
although you say that, sorry to interrupt, but you say that, but it is becoming it is difficult to get them, and especially as for Propeller and for our clients in a development, we don't want too many of these within a greater development, because Brent, you are building these in areas where it's mainly owner-occupiers and family homes that are being built. So the surrounds are perfect as far as that growth. So it is important that it looks that it's part of the community, and that is becoming more difficult, isn't it, to find those sorts of sites?
It is. We do spend a bit of time zigzagging the streets, and dare I say it, someone's got to take one for the team, but we've got to schmooze those developers we've to get them happening.
I say that to my team all the time. Always take one for the team.
Yeah, but look, it is working, and but it's not without its issues. And sometimes we have had to say to you, look, hold off. We're just getting some stuff in line first, and then they're ready to go. So, but look, the joy of these properties are that whilst we're able to share the cost of the land cost across, and look, it allows us to actually get a full rental return on each unit, and it also spreads the risk on each unit. You're not going to have both empty at the same time. You'll have one going, the other one might change tenants and so on. And sitting in that mid-lower range, you'll always have tenants. We're not trying to go for the odd elite. This is a unique proposition because they're only subject to the person that comes along on the day.
Yeah. So just looking at this, we're saying, that a 3-bedroom with a 2-bedroom attached, remember it's turnkey, so curtains, blinds, dishwashers in each of these, plus landscaping. They've all got their outside areas, which are unique to them. Average price, Brent, for our clients, obviously it's dependent on the size of the land and the size of the internals, but we're looking in the 900s to $1 million. It sounds a lot, but remember it's 10% holding deposit, 20% guaranteed against your home. But the rent is so much more than just from a freestanding house. So looking at that, I think on one of the latest ones, it was the combined rent was about $1,140 per week, for instance.
Right. And, look, it's also your development for each one varies. So, for example, depending on that site, the ones we've got at the moment are sitting at about $1,030,000, and they've got somewhere up towards 1,200 plus. And so, there's a variation depending on which section, which corner, what unit you're putting on it, and obviously, but we put it together so that it's just this place. This is the rent roll, this is the price. And so it's clean and simple, and you can do your numbers and work those out on fixed figures.
Yep. Now, just looking at the future as well, I know that when these come up, that the property management companies have no trouble renting them. Obviously, when it comes to on selling, you can sell to an owner-occupier. Let's face it, owner-occupier, 3-bedroom, help with the rent with the mortgage by renting out the 2-bedroom or having older parents that are living in the 2-bedroom, or it might be that as first home buyers, you want to start in the 2-bedroom and rent out the 3-bedroom to pay the mortgage and then move over. So whether you're an owner-occupier or you're an investor, when we're looking at the future and the demand for these in the future, you've got a full choice of options there for purchases. Now, just very quickly, over the years and looking at the growth of these properties in Selwyn, whether there is the freestanding homes or it's the dual income, let's look at that capital growth and what you're seeing and why you believe that the increases in pricing is going to be quite high going forward.
So we've been selling standalone 3-bedroom homes roughly around the 675 to 710 market in Rolleston on a regular basis, and they're at the lower end of the price bracket. When you look at say 2-3 bedrooms homes in a dual key situation, these are actually work out on average around 500s, early fives, around the 500 mark. Now, it's not going to take a Rhodes Scholar to work out the difference between 500 and 675. These are going to have because they're both pulling the same rental. Now, these are going to have a resale gain that are going to be worthwhile. And whilst there isn't a guarantee of specifically subdividing each of these 2 units off, it's not precluded in the respect that in the subdivision that we have, the current 3, those ones, there is no covenant to say that you cannot future subdivide. So we will do them to the normal specification, but at this point, there are 2 on one site.
Now, let's just make that a lot clearer for our investors. So Propeller will not sell those with the saying that, yes, definitely that you can subdivide, which means that you could sell off the 2-bedroom separately or the 3-bedroom. We sell it as one product, if you like. However, this is the opportunity, and that also is quite exciting because it means that this one property potentially, by subdividing the 2 of them, the one that you sell could pay off the other. So you've still got the 3 or the 2-bedroom, but you've sold off the other property. Now, capital growth in those areas, Selwyn is known to be one of the most dynamic growth areas in New Zealand. And Brent, with the cost of land and the cost of building as well, over the next, say, 5 years, what sort of growth do you, and I'm not going to hold you to this, obviously, but what sort of growth are you predicting for that area and how prices are going to increase?
I modelled it out, Nikki, but it's fair to say that I was driving the back of Rolleston and I went for 6 kilometres from Rolleston and I was still in the Rolleston's industrial zone. So there's now that the motorway has gone into Rolleston and so on, the trip from middle of town to Rolleston is 20 minutes, and it's constant at that. We're finding that the desire, the Rolleston pricing has actually risen higher than Lincoln, which was traditionally quite a bit more expensive. Now, but in saying that, it's quite dynamic at the moment. We've had the site section prices in Rolleston stay at a reasonable price, whereas elsewhere they've actually tended to be quite a lot higher for what you're getting. But in the same breath, and if we talk back a couple of years, they were substantially up on that, and they will pop back to those numbers, is my belief, fairly rapidly as this bunch of land that's been developed gets utilised and the new stuff starts to come on.
Okay, that's great. Now we've got a couple of, excuse me, I'm going to put on my glasses here. We've is there any questions at the moment for Brent? We're going to have questions and answers a bit later. But if you've got something now that you would like to ask Brent, okay, not seeing that at the moment. Brent, thank you so much. We will come back to you, but yeah, two very exciting propositions, and house and land. And you can see that we're talking at a particular price point. Now, not everyone can afford $900 to $1 million or just over $1 million for a property. That's not to say that they're not getting a good property for what they're going to be, what they can afford and what they need to achieve. And I go back to this concept of a $500,000 mortgage. You need a property that at a base level is about in the early fives. Now, obviously, you want a good rent and you want that capital growth. That's important because over the next 5 to 10 years, you want to have that property double. It isn't just house and land that are exciting. So let me bring back Guy Randall from Wolfbrook. And as I said, we've recommended quite a number of properties from Wolfbrook in both Wellington, Auckland, and Christchurch. So thank you, Guy, for being with us.
Morning again, Nikki.
Let's just talk about townhouses and the demand both from owner-occupier, first home buyers, and tenants. So I'm handing it over to you.
Fantastic. Yeah, look, certainly the market started turning around quite considerably over the last 3-4 months. So we're excited about where the market's heading this year. Currently, Wolfbrook is building in Auckland, Tauranga, Wellington, and Christchurch, with some plans to kind of expand further. So, yeah, to your point, probably one of the key benefits about purchasing a off-the-plan townhouse is they are turnkey as well. So all the benefits that Brent spoke to as well. But that price point moment is quite different. So currently we've got stock from 499,000 through to 899,000.
That 499,000, it's not going to last, is it? 400.
No, it's not. Look, they're not making a lot of extra land out there in the world. That's not going to happen. While build costs have come back a little bit, we don't see them falling drastically any further from here. I think changes that the government made over the last couple of weeks in terms of build supply and products coming in, really around the fringes stuff. It's not going to change the world. So, yep. Now's about as cheap as it's ever going to get out there, or as affordable as it's ever going to get out there, that's for sure.
Yeah, so with the townhouses, you've got 1, 2, 3 bedroom townhouses, outdoor living, in some cases off-street parking, and where they're placed. So let's just look at Auckland, for instance. So
Sure.
We're talking about Greater Auckland, and let's look at the areas and what you can get in those areas if it was a freestanding house, which, brand new, very difficult to get. So
absolutely. Look, and I think that's actually a really key place to start for Wolfbrook. We're massive believers in buy the most house you can in that kind of townhouse market, and that may include garages. Quite often we do garages. We almost always do off-street car parking. I believe, particularly in the areas that we build, off-street car parking is hugely important, unless you've got very, very close access to transport links, which, here in Christchurch, there's not a whole heap of different parts of Auckland you can get further away. So to your point, look, you could be buying a 3-bedroom townhouse in Te Atatū Peninsula in Auckland for 899,000. Now, if that was to be a 3-bedroom standalone in that same suburb, look, you're looking at 1.1 1.2, 1.3, 1.4 million. The sky is really the limit, obviously.
Yeah.
So it's a lot more affordable, a fantastic, not just entry point. And I think that's something people kind of get a little bit stuck on, like this is an entry point to the market. Certainly is for some first home buyers or new home buyers. For investors, with your guidance, they may have a mortgage of 900,000. And so that's what they're trying to double in 10, 11, 12 years. So look, I think that turnkey townhouse moment is much, much more affordable, particularly, and the value you can get, particularly if you're in smaller developments. We do a number around here to two at the moment that are 5, 6, 7 units. That's quite a different proposition than a central city townhouse in 70 units. Still has its place, but a completely different product. And look, I think, with your help, purchasers look for what's right for them. I think that's hugely
And when you look at the rental as well, a $1.3 million property is not necessarily going to get a greater rental than what we're seeing for a 3-bedroom townhouse, for instance. And that makes a huge difference to the sort of top up that an investor is going to have to make at the moment, with interest rates, even with them dropping at 6.89. So as an investment financially, not only are they really attractive, but financially they make better sense, especially in the main areas.
Yeah, absolutely. I mean, rental yields are obviously, people buy investment properties for the two parts, right? And rental yields and capital gains. But certainly not a whole heap of fun if your rental yields quite low and you're having to put your hand in your pocket every week. Sure, we can all see the long-term benefits of investment property gains. But frankly, and from a psychological point of view, it hurts quite a lot if you have to put your hand in your pocket every week by heaps. So I think making sure that rental yields as advantageous as possible. I think I also would advocate for taking an almost a customer-centric approach about what your property is actually going to do. So as soon as you move to a property that suits a broader type of people, that people can, frankly, they can afford, you're automatically in a better place. And I think with a lot of the properties we develop, we certainly look at who is going to live in that place, because that flows through to the investor and the yield they're going to get from the property.
Yeah, I mean, I've got to say, I've seen a change in the first home buyers. I mean, that's not our market, obviously, but I used to smile a lot when on TV they'd interview first home buyers, and they were saying, "Well, we can't afford a house. It's terrible. We can't." And I kept on thinking, well, hang on, you're wanting to start where your parents finished.
100%.
And
yeah.
Now we're seeing a more pragmatic approach. I have apartments in central Auckland where previously it was just tenants. Now we're seeing first home buyers. And I know that when I'm dealing with Wolfbrook as well, I've got to be really quick for my clients, because you're now seeing first home buyers looking at these lovely townhouses with French doors going out to their garden and thinking, hey, I can get brand new 3 bedrooms, great size, for a cheaper. And so that now has become a huge part of the market, hasn't it?
Yeah, absolutely. And look, I think that growing awareness from first home or next home buyers that this house isn't their forever home, and it doesn't have to be the gold standard of where they are for life, but it does need to be warm, dry, low maintenance, really well located. I mean, we specialize in brownfields developments, which is where there's a previously existing house, remove that house and increase the intensity on it, right? So those houses naturally are closer to the CBD. We're more focused on city fringe. Auckland, we're in areas like Te Peninsula, which is fantastic, a lot around west and some south. At the moment, we're in east as well. But here in Christchurch, we're definitely city fringe, 5-10 minute work commutes to work, which is pretty great. But we're definitely seeing a lot of first home buyers buying our product. The really nice thing for investors is now they're in developments with first home buyers.
Yes,
so you get a better sense of probably belonging within the community, within the development. That's a really nice outcome. I think that really you've got kind of a more of a care factor coming through when you have home buyers in the development as well as investors. So I think that adds, quite a nice aspect to kind of some of the smaller developments.
And that's one of the things that we look for as well with Propeller. We look for the profile when we're talking about these sorts of developments, who's buying into them, and is there a community? Because of course it's a chess game. We're looking at the future. We're looking at who's going to be buying these in the future. And so now with townhouses, with the demand for first home buyers, with investors now seeing that they can have the benefits and the return of a 3-bedroom house without paying that sort of money, we're now seeing that demand. And of course, that demand is going to drive prices as well. And
yeah, absolutely.
So when we're talking about capital growth, there is a great advantage for townhouses, especially in the areas that you're discussing, which is fringe Auckland, Christchurch, and Wellington, for instance, and Tauranga as well.
Yeah, look, capital growth in townhouses, I feel is potentially a mixed bag. And look, let me explain myself. So I think fundamentally with any type of asset, it has to be you're probably going to see more growth in something that really deserves to exist, right? So with townhouses, not all are created equal. We firmly believe wherever possible in off-street parking. Now, the reason for that is, that lack of access to public transport in a number of areas, and the fact that Kiwis actually, frankly, still drive cars. Now, if you're living in Auckland, and I have, it rains 6 months of the year. It's a bit harsh on the team in Auckland. Wonderful climate in terms of quite warm, but it does rain a little bit. And frankly, down here in Christchurch, it's pretty cold. So there's still a demand for cars, and you do need to park those cars somewhere. So if you're buying a townhouse with a car park, that's kind of, we think, the gold standard. Now, there's certain areas where we develop in Lower Hutt that are right next to or just down the road from a good public transport infrastructure. Again, no problems with that. We think that's great. But I think there is a potential for townhouses without off-street car parking that are further out to not really hold their value. And, well, they'll probably hold their value, but certainly not have the capital appreciation of a really good fundamental asset. So look, I think along the way, we're going to see good growth. We're still seeing good growth. We're seeing good growth return to the market, particularly in Christchurch. We're a massive fan of Auckland. It's always going to be the gateway to New Zealand. Population's growing at record rates. We're seeing huge amounts of internal migration down here to Christchurch, which is really, really exciting. Tauranga is a stunning spot. We built a lot in Tauranga. It's really the start of the kind of multi-unit movement in Tauranga, and we're seeing that work very well for us. Wellington, I think, potentially has a few short-term challenges in terms of the public sector is obviously facing some kind of cutbacks that probably reduces the demand in the short term. But long term, with migration to New Zealand still increasing and Wellington being the capital, it will come right. So it's kind of potentially a short-term blip, which is a fantastic opportunity for investors to get into Wellington when it's taken probably the biggest dip in prices around the country. So it's at the bottom. We're still transacting there. Great time to take up that opportunity.
No, I agree. And it comes back to looking at what you're wanting to achieve as an investor and what you can afford as well. So to get a 2-bedroom townhouse with outdoor living that is brand new, that is healthy home compliant, that is turnkey, and to get that in the late 5s, early 6s, because I think that's the sweet spot for my clients as well, particularly, is a great opportunity, because the rental as well is that there's not such a difference with the sort of rental that you're going to be getting as to the the purchase price if you look at that calculation. But nice looking properties in the fringes of high growth areas at that price point, I think it's an excellent opportunity to.
Yeah. And that type of property also attracts a good tenant, right? A type of tenant that's going to pay their rent on time is able to pay a sustainable rental price both for yourself and theirs. And that tenant's attracted to the property because it's warmer, drier. The insulation's fantastic, so the electricity bill's low. People have caught on to this. So when tenants are looking for properties, they're looking for a quality property that's not just well located, but it's well insulated. It's everything they want it to be. And from an investor point of view, you want demand for what you own, right? No point owning an investment property that no one wants. No one wants to live it. So we believe, that we're certainly offering townhouses offer a really good investment for people because there's going to be sustained demand there for tenants wanting to live in them. And at the end of the day, that's actually what's going to pay off your mortgage.
Absolutely. Now, one of the other things that I get asked about, and it's sort of like an urban myth, because when a client says, I've been talking to this person and that person, and oh my goodness, to have a body corporate or a resident society is a great thing. And I have to laugh about this because all my properties do have a body corporate or a resident society. Now, Wolfbrook tend to use a resident society. Can you just talk us through that? And of course, there are enormous benefits of the building taken care of, as well as the internals for the.
Yeah, look, and it is a myth-busting exercise. And as soon as you kind of go through a few key points, everyone's like, oh, okay, that makes sense. Put it this way, we've had a few opportunities recently to do developments without resident societies, and we've chosen to go ahead with them. So some of our smaller developments, four townhouses, etc. You don't have to have a resident society on that. We've chosen to go ahead. Now, we continue to choose to go ahead because we believe it's right for the purchaser. And protects the long-term value of the asset, which is the property. So a resident society generally covers off insurance for the total building, making sure that every single one of the units is insured. Now, if that was left to private market, not a great day if your neighbour doesn't go put insurance on their property and has no ability to, in the case of something going wrong, to fix your property. It puts a very light touch over what is the upkeep of the property in terms of your neighbours not going to be able to go paint their house bright orange on day one. But in terms of, is it overly prescriptive? No, you're still allowed animals in your house. It's absolutely a freehold title. It is your house. It is your land underneath it. What it does do is actually bring down some overheads quite well. Good example is when you insure a total development, let's call it 10 townhouses, because the insurer knows they've got all 10 properties insured at any one time, they don't sit there and put a risk rating over one of the houses. So what actually happens, if you and I were to be one of the individual owners of one of those 10 properties, our insurance would likely be around $1,800 a year. But if you and I were to go to insure it ourselves outside of the resident society, it'll be around $2,600 a year. So you actually save a very substantial amount on your annual insurance. So that's right off the bat. Now, yes, you do put some money into making sure that your front lawn or your neighbour's front lawn facing the street is mown. Absolutely. And you do put some money towards making sure that your driveway is kept well and that there's communal lighting so people are safe and warm in their house. I don't think those are bad things, and keeping the amenity in good order of a development is just protecting your investment. I think it's a very good thing.
I totally agree that all of that is included in that cost. In our cash flows for our clients, of course, we included in the cost.
Absolutely.
And we have that cost going up by the cost of living every year anyway. So none of it's a surprise. And as you said quite rightly, the lawns are mowed, the lighting, the roofs are taken care of. There is nothing there that is a surprise for you that you've got to put your hand in your pocket. And it comes back to the fact that we want this investment to be hands-off. It's got to run in parallel to your life, and having a resident society or a body corporate helps achieve that for you. there's no such thing as these societies going crazy with putting up the cost. I mean, and that's the other thing, Guy, that I get. What about? And I go, urban myth. It doesn't happen.
So I can actually safely tell you, so I am a member of a body corporate down in Waltham Road in Christchurch. Crocus manage all of the resident societies on all Wolfbrook developments. So I think that's really important to make clear. So in our case, we are not the resident society. Once we settle the house to you, it's your house. We're not hanging around like a bad smell and telling you what to do. Crocus, who are experts at resident society body corporates, they run the resident societies. As a member of one that I personally own, super light touch, I get a link once a year. I vote, I think 6 or 7 things actually. Before the meeting, it's an online meeting, which I give my proxy vote to Crocus anyway. 10 minutes later, I just get an email back saying everything moved forward, no problems. Now, the interesting thing is, in the vast majority of resident society, they actually get cheaper in year 2, because your first year actually covers about 15 months of insurance. And it also takes into account an annual insurance review, which then most of the resident society move to a biannual insurance review. So, you know, my personal example, it dropped from 3,100 in year 1 to I think 2,700 in year 2. It actually went down and stays about that level.
Well, I've learned something. I've learned something on that, because I have it going up in my cash flows for my clients every year.
Yeah, right. No, it generally drops down in ours because the insurance is for 15 months in the first annual. Then it sits at 12 months, obviously, after that.
Right. Thank you so much, Guy. And I just want to reiterate that it is a turnkey. All
Absolutely.
the facilities, which is curtains, blinds, dishwashers, landscaping.
100%. Yeah.
And it's the 10% holding deposit. Mortgage broker has the bank advance that on your behalf, and that sits in a solicitor's trust account and
certainly does,
and cannot be touched. So thank you. Hold on, because we may have other questions for you, but thank you, Guy.
Thank you.
Right, finally, and sorry about this, let me introduce you to Darren Brown. Darren has built 3 apartment blocks in Auckland in the past, and is now the developer of Chelsea Rise over in Birkenhead, and I've got one of these, I've got to say. And having said that, just going back to Guy, I also have Wolfbrook townhouses. So let's now look at an apartment and the benefits of an apartment. And we're going to be talking specifically, aren't we, about Auckland, because this is I believe that this is for apartments. This is the growth, and maybe Wellington, the growth areas in New Zealand. So, Darren, let's now look at an investor looking at Chelsea Rise.
Yeah, thanks, Nikki. So Chelsea Rise is the new development that we're currently undertaking in Birkenhead and Auckland's North Shore. And we just want to go back to Auckland for a second, because this is a really exciting time, both in the property market in New Zealand and in particular in Auckland, in our view. So if we look at the big picture numbers in New Zealand, we've had a couple of years where the property market really hasn't done a lot. It's probably went backwards a little bit. Interest rates went up to record levels, really, with certainly record increases over a short period of time. And as a result, the property market was hurt, in terms of value. So we've come to the end of that. We got to the point where in the middle of last year, the market bottomed out and started going up from that point. Yet interest rates are still high. As a result, the number of new projects that are being developed at the moment have gone right down. So the number of new building consents are going down. I think we're at nearly a 30% drop year on year. But at the same time, we're getting record levels of immigration into the country. So the latest stats that came out, I think we're about 130,000 net migration into the country, yet the number of houses being built are going down. So, we look at it and we think that once interest rates start coming down later in the year, the property prices are going to start to go up quite strongly. And so anything that's been bought off the plan now, it's a great time to be doing that. If we look at Auckland in particular, sorry, Nikki.
No, I was just going to say, going back to Auckland,
Yes.
I mean, there has been a huge lack of building. I mean, the demand, it's been a chronic shortage for a long time, hasn't it? And it's just compounding.
Yeah, Auckland's been underbuilt for a long time. And, what we're seeing now with the migration coming into the country, typically about half the migration comes into Auckland. And, that's what we're seeing at the moment too. So it's a great time to be in Auckland. And, one of the benefits that we see, with apartments in the Auckland market is that you get exposure in your property portfolio. So you might have properties in other parts of the country, but Auckland is our biggest city. And, it's certainly the most expensive real estate, the highest rentals. So it is a good place to be involved and a good place to be exposed to, for a property investor.
I always say to my clients, it's considered Auckland blue chip stock. So, you want to have one of those in your portfolio at some stage, and whilst you still can.
Yeah, that's right. Yeah, and so, you've talked, and the other panelists have talked about, the cost of buying a standalone house in these areas. And yeah, if you can afford a standalone house, great. But for a lot of people, they either can't afford that in the likes of Auckland. And, we're developing, in the most expensive part of Auckland, typically, which is the Auckland, well, one of the couple of most expensive places anyway, which is on Auckland's North Shore. And, this is a premium location, a really prime spot. And, to get a standalone house and land in that area is just going to be prohibitive for most people. And, so that's why apartments are a really great, great option. You get exposure to, one of the best real estate markets in the country, for a reasonable price. And that's one of the really key benefits of apartment buying.
And also the rentals, and there are two forms of rentals with apartments, and not so much with townhouses, but with apartments, you've got not just the long-term tenants, but you've also got Airbnb. And one of mine was had an Airbnb recently, and I couldn't believe that, talking to the managers, it was 100% rented, 100% of the time. There was no vacancy, and the cost per night was huge. So the return on an apartment, in that respect, giving you the two options of how you're going to rent it out, is also incredibly attractive.
Yeah, no, we're finding a lot more of our purchasers, investor purchasers are looking towards Airbnb. It's a really good option. The rental returns are really high, and particularly an area like Chelsea Rise, which is located right in the historic Birkenhead village in the Auckland's North Shore. You're, in terms of sort of local amenities, you're right in the town centre there. So you've got your cafes, your restaurants, just along the main street there. You've got all the shops you can imagine. You've got a supermarket across the road, the big Highbury shopping centre. For investors that own occupiers, you've got the school across the road, really good school, and also public transport. And this is one of the key benefits of buying apartments, is that you do get prime locations, really premium spots, like what we've got with this one. And you've got a bus stop 50 metres from your door, and you've got the ferry down the road, and just all the great transport links there.
And also, I in talking to you and seeing the profile of the people that have been coming through Chelsea Rise as well, it's really interesting that we're now seeing owner-occupiers, and this is in Auckland a lot, I think, probably more so than the rest of the country, that you've got a section of the market, certain age group, that are now downsizing because they want to access the capital growth in their homes, which are well into the millions. because they now want to travel, and they want something that's attractive, that is easy.
Yeah. Well, if you went back, 20 years, maybe 30 years, you wouldn't find many apartments in New Zealand. There were very few. And what we've seen over the last 20, 30 years is that whole apartment market has really developed, and Auckland's or New Zealand's acceptance of apartments has really increased. And in particular, Auckland, where apartments are now a recognised part of the property landscape. And Auckland is very much an international city. So you're getting a lot of people here that come from overseas that are used to or accustomed to apartment living. And that's what they're looking to buy. And that's where they're looking to live. And if you have a look, just as an aside, the mix of migrants that we're getting to the country now, if you look at the top 3 categories, they're from China, India, Philippines at the moment. And these are all countries that have huge levels of apartment living. That's what they're accustomed to. So we see that the demand for apartments is only going to increase over the next 2, 5, 10 years as these migrants get to a position where they're ready to buy property, or right now where they need to live. So, so there's a really strong case for apartments purchases at the moment, in particular in this market.
Also, just looking at the fact that the development is about 2 years away from being completed. So I want to talk through the process of that. But let's go back to the question that I asked both Guy and Brent about this capital growth, and clients saying to us, well, is there capital growth? Is it at the same level? And where do you see the values going over the next couple of years? Because this is, we're talking about Auckland predominantly with this development. So let's look at where you see with Chelsea Rise, by the time that it's completed, the value of what has been bought and purchased today.
Yeah. Well, I think, let's come back to the question around capital growth in apartments. And I've heard the same thing. People say, oh, well, you don't get as good a capital growth with apartments as you do with houses. And I can tell you that if I go back 10 years, which is typically about the time in the market where property prices double, I know you said maybe 12 years in your calculator, but, it's typically around 10. But, I look at the selling prices that we have now with our apartments. They are, but it's not just the selling prices, the value of similar apartments as well. They're double what we were selling apartments for 10 years ago, and that's the same as townhouses, the same as standalone houses. So you're getting really good capital gain in apartments just as you are with houses. And I can't recall exactly, but one of the big real estate firms did some research on this a couple of years ago, and they showed that the apartment capital growth rates were virtually the same as standalone houses. So there's really good data out there on that. In terms of what we're seeing at the moment, capital growth over the next few years, well, it's hard to predict year on year, of course, but what I would say is that we've got record levels of migration coming to the country. We've got building numbers are going down, and we've got interest rates that are going to come down either later this year or early next year. So over the next couple of years, we're going to see every single condition that you'd want to see coming together to comprise a capital growth scenario, which is going to be really strong. So I know that the bank economists are predicting anywhere from 10 to 20% over the next couple of years growth. And we sort of probably fall, our view is probably at the higher end of that. I wouldn't be surprised if we're around 20% growth cumulatively over the next sort of 2.5 years.
And the benefit of that, the benefit of that, of course, is let's go back to the fact that it's going to take 2 years to build this development. So what does this mean for investors? Well, I think it's really quite exciting. And one of the reasons why I've got one of these is the fact that you're talking about that capital growth of 20% over the next 2 years. So if I purchased a property today, put my 10% down, turnkey once again, and that sat in a solicitor's trust account, I'm not having to top up that mortgage
No.
at all, because
No.
I'm going to enjoy that capital growth for the next 2 years whilst the property's been built.
Yeah, and that's a common question we get asked, is like, well, it's going to take 2 years to build or 2.5 years to build. That might be a bit long. These are investors saying this. And I'm saying, well,
No.
if you're a sensible investor, you want us to take as long as possible to build this. If I said I'm going to build it in 5 years, you've only paid 10%. You get capital gain for the length of time it takes us to build the property. So the longer it takes us to build, the better for you. You only got 10% down. If you actually have to settle on that property, and once you settle on the property, you put in a 20% deposit, say, and maybe you're topping up some rental payments along the way, but you're doing that really to get the capital gain at the end of the day.
Yeah.
And, if you haven't had to settle the property, but you're still getting the capital gain, then you're winning every day of the week.
And it's the same thing. We ensure that our clients get a pre-approval on that loan as they're going through their due diligence process. So in 2 years' time, a couple of things happen. You've got the capital growth potentially, and if we're saying that the economists are saying 20% over the next 2 years. On top of that, we've got now the national government has come back and said that Brightline is now around about that. Well, it is that 2 years.
Yeah, right.
So from the moment that you confirm on that property to the time that it's built, the clock's ticking.
That's right. Yeah, clock starts ticking once the purchase is unconditional, which is when they pay their deposit. So right by the end of the 2-year period, they can sell that after settlement, and assuming the tax laws changes as been flagged, then they'll be able to sell that for no capital gain.
And which no tax.
No tax.
On that benefit. Just very quickly, we did have a question here. If you could just go through the developments that you've built previously, because Propeller's been dealing with you and your builds for, I think, just over 10 years. Is that correct? And I think as I said, we've got about 250 that we've recommended to our clients in that time. So if you just very quickly want to.
Yeah, sure. So we've done the big sugar tree development in the Auckland CBD, and so the first building that was built as part of that was called Prima, and the second one was Citro, and the third one was Ultro. So each of those builds took around 2.5 years, and they've all been finished to an excellent standard for CBD apartments. And the one we're doing now is actually is a higher level specification, higher standard of finish. But the Sugar Tree ones were still very good apartments, high quality for CBD apartments, and they are very well received. They've got a great reputation in the market. When they come for rent, they always rent quickly. When they come to be resold, they always sell quickly. So it's seen as a really good development in the CBD.
Yeah, and none of my 240 clients have had any issues with repairs, the maintenance of those properties either, which is obviously really important. And of course, you've got one of New Zealand's top building companies, construction companies that are going to build that as well. And that's part of our due diligence and with all of the properties that we recommend, who is building those properties.
Yeah, well, that's a good point. I mean, when you were talking about apartment development, it is a complex area, and you want to make sure that you're dealing with an experienced developer, and also that they've got an experienced team around them, both design and build part of it.
And we've got another question. It's for you, Darren, but actually for all my the companies that I deal with, and have done, that Propeller has been dealing with over the 15 years that we've been in operation, leaky homes. Now, I'm very proud of the fact that not one of the properties that we have recommended to our clients have had leaky home issues at all. And if you just want to reiterate that as well, Darren.
That's a good question. Yeah, so we've had zero issues with any of our previous buildings. The leaky homes issues really relate to properties that were built before about 2008. So between about the late 90s and say 2007, 2008, the building code and the building regulations were very different. So they allowed different systems, different products to be used. As a result, a lot of those systems that they were using through that time have failed. And that's why you're seeing a lot of, particularly apartment developments being, but townhouses and other houses as well, all around the place, have this leaky homes issue. But around 2008, 2009, the rules have changed. And, no builder, whether it be houses or apartments or anything, can use those same products or systems now. And that's why you're not seeing houses that were built after that period suffer the same issues around leaky building.
Great. So if I could bring back my guests, please, at this juncture, and I want to say thank you very much. From this, Brent, Guy, and Darren, is there anything else really that from what's come out of this discussion today that you'd like to reiterate? I'll very quickly say that we prepare cash flows for all of the properties that we recommend to our clients. And when we have our one-on-one consultations with you and we gather your information, that's when we're able to identify what sort of property, what price point of property, what profile of property is going to work for you. All of them are turnkey. All of them have great reputations. And it comes down to what is going to work for you. So, team, is there anything else that has come up? Are there any questions from? It's been great because the group of people that have been watching this have stuck with us. So none of us have bored them to tears, which I'm always very relieved about. So is there anything, any questions, anything that you'd like to add?
Well, just one point, Nikki, just probably on the apartment side of things, again, just a few quick points that I just wanted to mention as well around the benefits of apartments, and that, all the other stuff we've talked about, but it is the communal facilities are quite a big one. So you can actually, we've got gyms and residence lounge, co-working spaces that actually add to the amenity of your property. Your security is really strong, and also single level is something that people don't think about a lot, but it's, having a single level property, especially for people that are older or people that have, injuries or what have you, is actually quite strong. But yeah, low maintenance, as Guy was talking about, the body corporate side of things is actually, it takes care of everything for you. So all the maintenance is done. You don't have to worry about any of that. You don't have to organise your own insurance. You don't have to think about when you're going to paint the house or go around to the investment property on the weekends and do the garden or, fix something that's leaking. It's all done for you. So, just wanted to really say that body corporates are great, or residence societies are a great idea, and they do really make things easy for investors.
Yeah, and I think Guy brought up a very good point as well, Guy, that and I get asked that you do own a portion of the land in that development. And that's the same, isn't it, as well, Darren, with an apartment.
That's right.
It's unit title, which is it's freehold in that respect.
If I can make a quick comment, I first got involved with investment housing way back in the 90s. It was the mid-90s. And I recall at the time, there is no way this house at $285,000 is going to be worth that sort of money going forward. And, look, being the oldest one here, I would say there's a lot of my peers that would have thought they should have done it then. There is no time that is cheaper than now, and quite frankly, having someone like yourself doing the vetting, doing the work through, is actually beneficial for your customers, more so than you probably realize.
Absolutely.
Oh, there are a lot of traps out there, and we're seeing them as well with people that come to us and ask for our help because they've gone to do it for themselves and they haven't realized, once again, if you haven't got cash flows to show you what something's going to is going to cost you, exactly what the finance means to you on a weekly basis with that top up as well. And also purchasing something that looks really cost effective and cheap until you get into it and find that the fixtures and fittings are they're breaking down within 6 months because of the quality, or that the price does not include curtains, blinds, as we said, landscaping, all of the things that that you need to have if you're going to be tenanting.
Yeah. The other thing I would just add in there also is not all things are created equal, right? Whether that's in a standalone or dual key space or apartments or townhouses like the three of us operate in. There are operators out there in development companies delivering product that appears from the outside to be quite similar, but frankly it isn't. And that does cause a lot of trouble. I know, in terms of, again, buying off the plans for all of us, that takes a huge amount of trust and confidence for our customer. There are developers out there, frankly, right now, who are delivering something completely different than in the brochure. They just are. And, you'll look into the contracts, and I know Propeller do your due diligence, and a number of your customers will come back through their solicitor or through Propeller and ask us exactly about clauses in our sale and purchase agreements. Now, what's on the paper is one thing, what the developer is actually going to do is another. Now, there are developers out there, and probably each of our three spaces, that are delivering something and then just relying on the contract and saying, oh no, I was allowed to change this by this much. There are some horror stories out there. So for customers, do your due diligence. You don't want to be that customer that when you take control or take ownership of your new house, realize there is no bath or shower because the developer just decided to change it. And so you bought this because there's a shower. And this is a true story, by the way. And then you get there and there's no shower head because he just decided to change it. So there are horrors out there, I think, for customers buying through, buying through Propeller and buying from developers with, frankly, good reputations and a lot on the line. I think that is a far safer way to make an informed investment. And I'd encourage, your customers and anyone else out there to use businesses like the three of us that are here today and are willing to get up on a Saturday morning and put their name and face to it.
Oh, please, please.
Because next week's netball, and so I'd have to say no.
Yeah.
Well, luckily you didn't. But actually, that brings up a good point. We had a client solicitor this week actually talk. One of the clauses was that if the some of the fixtures weren't available, that they could be replaced by something of a similar quality and value. Now, if I didn't know the developers here, I would be looking at that quite skeptically as well. But once again, it's what you were saying, Guy, that not everything is created equal. We know what the outcome is. We know what the finished product is because we have done our due diligence. We've seen the finished product. We know where you get your finance. We know that you're not going to run out of money to get these built. And so if someone went to do it themselves, their due diligence, these are things that they're just not going to know or to find out.
Yeah. Nikki, if I could just make a point as well, probably final point. So, but, I've dealt with a lot of your customers personally over the years, and I've met most of them, probably most of them, and I've never heard a bad word about you and your company. They have really so positive about what you've done and the impact that you've had on their purchasing decisions and your investment, their investment sort of path or journey with you. So I just want to say well done, and yeah.
Thank you. I've got another question here as well. I get asked this, and I'll let you answer this, and then I'll step in as well. So if you're buying something off the plan that's 2 years away, and no, I will say something, because Propeller stays with our client throughout the whole journey, And I would like to say that I don't think we've had one client that has bought off the plan that couldn't settle, or that the deal didn't go ahead because we've helped them at that stage if they've needed help for the on-selling of that property, for instance. So this is for you particularly, Darren. If a client can't settle, are they able to on-sell that property before settlement?
Yeah, they can. And as you've said, I think there've been over a couple of hundred clients that we've worked with you on, Nikki. I think there were a couple that couldn't, and I know that you've gone out and you've on-sold the property before settlement for them to help them out. So, they certainly can do that.
And I think it's important, Guy, Darren, and with Brent, when we look to on-sell, we need to ensure that the integrity of that development is maintained for everyone, for our clients that have purchased in that development and for others that have purchased in that development. So it's got to be a controlled sale. It cannot be for anything under what that value of that property is. So I am prefacing what I'm saying in that it's in everyone's favor. Yes, we can help you to on-sell that property. We get the developer that gives their approval to that, but it is really important that the integrity of that development is maintained. So sorry, I am coming back to that, but I've got to protect my clients, which means that what they pay for that property is maintained when they go to settlement, and obviously to enjoy capital gain and profit when they settle.
Yeah, of course.
Yeah, look, we're aware that life happens and markets move. No one wants to be in a position, people don't walk into purchasing a property knowing that, with the thought that they're not going to be able to settle. So we understand life happens. Where there's been instances of this over the last, probably 18 months or probably only the last 12 months, we've worked pretty hard with those clients to come up with a solution for them. There's a number of different ways you can do it. I don't think any of us sit here and say we want to be the proud owners of someone's deposit and them not in a house. So, we're going to be pretty keen to work with both yourselves or the customer to get a good outcome for both parties.
Yeah, and I think you're right over the last 12 months, particularly because interest rates have gone from that 2.5 up to 7. And so it's not just that circumstances change in someone's life, like losing a job, for instance, or divorce or whatever, but interest rates have played a big part at the moment. And so this last 12 months, it has been quite relevant. But as I said, if you do this on your own and your circumstances change, you're on your own.
Yeah, it's a lot harder.
You do this through a company that is helping you and working with you, then you're not on your own. And we can be dealing with the developer, because remember too, and I apologize, guys, but when you've got someone coming direct, that's one client. That's one person that you may never see again. I am dealing with these developers and I have lots of clients. So my ability to work on your behalf is a lot greater. And I'm apologizing for that, but that's the reality of business as as well. Okay, nothing else that I see. I want to thank everyone here for coming along. Please remember, if with Propeller, we have one-on-one consultations, and we put together your strategy for you. That is totally free. There's no obligation to that. You can walk away, and there is no cost to that. If you would like to have a one-on-one consultation, it's either 0800 81 81 91 or info at propellerproperties.co.nz. Finally, I do have a seminar that's coming up at the end of the month at the Northern Club in Auckland. It was very successful last month, and so I'm going to be doing it again. And it's a great location. Have a glass of wine, talk to me, and we can go through things in more detail. But once again, thank you so much for your time. Thank you, Guy. Thank you, Darren. Thank you, Brent. Have a great Saturday. And I really look forward to you joining the Propeller family. Thank you.